So welcome to podcast number 2 of Laura Abbey and the Abbey collection. Today we're going to be talking about what's happening in the Denver market, updates from today, last month and a year ago, and also Laura Abbey's process in the real estate world.
Excellent. Can't wait to talk about my consistent process.
So Laura, let's get straight into this. What's your mindset when it comes to real estate? What are you thinking about? How do you apply that to your clients?
What I'm thinking about every single day is knowing everything I could possibly know. So what I'm thinking about is watching the market, seeing if we're up in terms of houses on the market, seeing what prices are doing, looking every single morning and seeing how many things went under contract, how many things closed, how many things are on the market, just to make sure that I know everything that's going on. I think it's really important to see little subtle changes and then also to watch the big picture for our clients and for my own knowledge.
So with that, how do you apply that to your clients? Do you send like a weekly update? Do you send anyone there's big changes in the market? Like how do you get that across to your clients so they're the most educated, most well informed of what's going on in today's market?
Well, you make a valid point. How I apply that and let my clients know is right this very moment in this podcast, because I don't really send a lot of this stuff out, and probably we're going to need to get better at that. I think what I am really good at is as I'm taking the clients out, as we're going out, as I'm working with buyers, as I'm working with sellers, is applying the knowledge to the clients that are wanting it at that moment. So it's not something I send out partially because I don't know how much people look at that kind of stuff. But I sure know that when they're ready to sell and when they're ready to buy, they want to know all that information. And when I have investors, I know you and I both work with a lot of investors for our team, and the way that I apply it in that respect is to watch what's coming, what's going, how quickly it's all happening, and what's going on with the market. So I apply it more in the moment than I do making it something that I send out to everybody.
So it's more than for you to have that greater understanding of the market. And as soon as somebody asks you a question, then you have the answer straight away. You can't go, okay, I'll go and find out what that is. Because people want to know here and now. Because it's such a hot market, you have to move on properties. Therefore, you have to have that information to hand.
Yep.
I think that's what you do a very good job of. It. You're very well educated. You know, obviously, you can always work on, can we get that information to the clients on a consistent basis? But if they're not looking at properties, they're not looking, then they'll probably just go, oh, I don't really need that knowledge, and bypass that email and move on. But I think when you meet with clients, you have lunches, you do the seminars, you're very well versed, you're very well educated. So if somebody does have a question, email, text, whatever, DMs you on social, then you can get straight to it.
Yeah.
It's not like, oh, I'm going to wait a week until I get back to you. No, I know exactly what it is, and I'll get that information to you as soon as I possibly can.
Absolutely. I'll text you. Usually if you text, I'll text you right back immediately. But yeah, I could probably work on, again, being more consistent with sending that out to people. But I feel like the people that need it, when they need it, the information is there right in my mind because I'm looking at it every day.
So with that education and that knowledge base you have, I mean, what else sets you apart from other real estate agents in Denver, in Colorado, and you know why are you so successful?
I read something this morning that is perfect for this. It talked about how obviously talent will get you so far, but hustle beats talent every time when talent isn't hustling. So I think, I don't know if I would call myself natural talent because probably I hustle more. I mean, I've got the desire for knowledge. So that's maybe you call that natural talent because I am always wanting to know what's going on and wanting to make sure that I'm at the top of my game. And then the hustle comes in that I am applying it, I'm looking for it, I'm thirsting for more and wanting to share that and making sure that our clients are getting the best deals possible out there and making sure that we are as informed as we need to be as we're going forward with any decisions. So I'm gonna have to say, talent and hustle, and as you like to say, work rate.
Well, I think you got a passion to realise people's real estate dreams. I mean, that's one of your missions in real estate. You know, it is that you feel that people have a dream in real estate, whether it's their family home forever, whether it's their investment client, or people who are just buying rentals. You know, you are looking to realise their dreams. So the more educated you are, the more hustle you have for them, then that really what sets you apart, because you are, you know, actively getting out there in the market, in the neighbourhoods, finding out what's going on, to best serve your clients.
Well, not only that, I mean, as I said, this is a long-term career for me, 30, 40, 50 more years.
She won't be alive that long.
Yes, I will. And so there are times where I have to stop clients in the middle of something and say, I just am not feeling right about this. This doesn't feel like the right deal. I feel like we could do better. And as hard as that is, because you see a check at the end or whatever, I see more of the long-term picture of, God, this doesn't help us get to where they really want to be and where I think they should be for the long term. So yeah, I'd say that's a passion. It's a passion for making sure my clients are realizing their dreams, whether it's a dream of a particular amount of cash flow, future equity, or a place where their family can live and go to the schools they want to go to for the next bunch of years, or walk to the neighborhoods they want to walk to, etc.
I think that just follows on and backs up what you said in last week's pod of actual items, is always think that you've got a lot of money in the bank, and always be ethical. Always make sure you're servicing that client to the best of your ability, because you want them to be repeat clients, you want them to have referrals. You know, you're not going to chase these leads. Your sphere of influence and making sure that every client you serve has a great experience, but that comes with finding the best product for them at that particular time in the market.
Yep, and then again, keeping the process less stressful to the extent possible the entire way through.
Okay, this is going to be a good one.
Oh God, I know where you're going with this.
What's your morning process? And then we'll move on from that, because this is going to be interesting for everybody who's listening to this pod.
I don't know if interesting is the word. I mean, I have a morning process. I have read all the books that say get up in the morning, morning miracle, meditate, write, etc., etc. And I've tried that for months here, months there, a couple days here, a couple days there. I feel like I have more of a nighttime process. I am naturally a nighttime person. So what is, for a lot of people, the morning process where they get up, they do their meditation, they do their reading, they catch up on everything, they do all that, I do that at night. So if you want my morning process, I'll tell you, it is to get up, leisurely lay in bed and read my emails and texts and catch up on them upside down while I'm still laying there, and then wake up, play with the dogs, run around the house a little, chase them around, make some tea and feed the dogs. So, you know, that's my morning. You want my nighttime process? It's a little more interesting.
Well, and that just goes on, obviously, from my background in performance. Yeah. I think there's natural circadian rhythms what people have during the day, and I think it's very hard to change. You know, I'm very much a morning person, so I'll get up early, I'll get a lot of things done, you know, but then other people are nighttime people, or they function better in the afternoons. So let's talk about, if you're not a morning person, it doesn't matter. No. You know, for you it doesn't matter. You know, other people may do. They may want to change. They may want to change some of their processes. You know, but when you function best, what is your process?
There we go. Thank you. When you go to bed at 9-ish, so that you can get up and start your morning process, is when I start my evening process. So really right about the time you go to bed, 9 or 9:30, unless you've gotten me hooked on some ridiculous program and then you leave me sitting there to watch it. Those days aside, my process is turn the TV off, and then I catch up on anything that I've missed throughout the day. Then I sit down and look at my calendar, I write things down, I write my goals down. So that's where I get into sort of the writing, having some silent time completely to myself. And then after I catch up on the stuff from before, sit down and look at where I am with my goals from the past week that I've got coming up. Then I'll sit down and write my next day. I will send, this is where everybody gets the batch of emails and text messages from me from like 10:30 to 12. And that is, let's get these things done tomorrow. Hey, these are our goals as a team. These are our goals as human beings. And from 9 to 1, or 9 to 12 or 9 to 1, I am the most creative that I've ever been. It's completely silent. And that's when I figure out where we want to go next with both my clients and with the team, after, of course, I've caught up on the rest of the day.
So with that, you know, you talk about goals, short, long-term goals. How far ahead are you looking for your short term? Is it just day by day, or are you looking a week or two ahead? And then your long-term goal, are you looking a month, 6 months, or 12 months?
Long-term goal is the year. So where is our goal for the year? We set a goal for the year at the end of last year. We've modified it a time or two, but it's very close to where it was. So looking at the long-term goal. So it's threefold, that process. So one thing I'm doing is, hey, these are the things that we need to get done tomorrow to get to where we want to be at the end of the week, to get to be where we want to be at the end of the year. So I would say the first thing I probably do is look at, okay, where are we for the year? Are we getting closer to where we need to be? Are we on track for that? Okay, what are the things? So maybe I do back it up. So I'll go the long term, then back it up to what things do we need to accomplish by the end of this week to get that done? And then what are the important goals to get done tomorrow? So every day, every single night, I am looking at all three of those things.
So I think that's great for everybody who's listening. You know, you have your outcome goal.
Yes.
So that's the big goal. That's what we want to achieve. Whether that's first million in real estate, whether it's 100 million, or whether it's 50 million. You know, okay, what am I going to get there? How am I going to get there to get to that 50 million goal? That's the outcome. You know, and if you fall short, you fall short. But at least you reach for something. You know, but it's got to be applicable and it's got to be realistic. You can't all of a sudden go, okay, I made $2 million in volume last year. I'm going to jump to 100 million without any sort of process getting to that outcome goal. So you can have these lofty goals, which are great, and we can aspire to reach those lofty goals, and you need them so you don't sit ceilings. But what's the process to get to there? And I think if you don't have a process, you'll fall very far short of that outcome goal. And I think that just comes down to who do you keep accountable, which is obviously yourself. You're the leader, you're the team lead, you're the senior broker in this operation. If you don't keep yourself accountable, then you can't keep your team members accountable. You know, so every task that you assign, every process you go through, it has to be accountable. And if you don't keep people accountable, you know, then obviously you won't reach that goal at the end of the day or the end of the year.
Right, and I think you reminded me of something that we've talked about over the last week or two, which is what are the things? So our goal is 50 million this year. What are the things that are going to get us to that 50 million? And so we've written a list of what those things are. And so making sure that every single day we are doing some action items on the list of the things that are going to get us to the 50 million.
So you brought up a good point. So what are those action items? You know, you talked about we have to do these certain things, and it's very consistent. There's a process in real estate, there's a process in everything you do in life, basically, in my opinion. You know, but you have to be consistent in that. You know, if you're going to farm, make sure you farm those areas.
Yeah.
You know, make sure consistently, like
yeah.
So it's every month. You know, you're putting out information, putting out resources to other people. Are you contacting your sphere of influence? Are you getting to those A's, B's and C's? You know, are you really hammering home with resource and education? Are they going to refer you with different clients? You know, you had a great get together the other night for July 2nd, and you brought 98 clients to an event,
yeah.
which is unbelievable. You know, those actionable items that you talk about in your process that you have to do very consistently to get to the outcome goal.
Yeah, so I think we talked about having quarterly events, and this was one of them, and I thought it was very successful. Talked about having monthly classes so that we can educate on investors. So all of our clients, whether they have a home or not, potentially want to invest in real estate. Then we talked about first-time home buyers. So again, most of everything we do is through sphere of influence. So a lot of our clients are going to have friends that are going to be buying for the first time. They're going to have family members that are going to be buying for the first time. So we do our investment class, a first-time homebuyer class, and then again, this is monthly. And then our third class that we do is a seller's class. So if you're thinking of selling in the next year, what types of things do you need to prepare in your home? What types of upgrades do you need to do? What do you need to do to have your house look a certain way? And what financial things do you need to do to prepare? So I think we've got the quarterly events to stay top of mind and also stay connected with our clients, the monthly classes, the newsletters that we send out, the fun things that we do, and then just continuing to be a home resource. We, as we've discussed before, we help with everything from where do we get our hair done to a handyman to a person who can change your lights out or anything else along those lines. So we like to be the resource for your homes every single day.
In process, we talk about different processes, actionable items. You know, are you consistent in doing what you're doing in the process? You get to that outcome. You know, so now obviously, you know, we talked about that, and now we want to talk about the demo market. So with that, we want to talk about what's happening now, what's happening last month, what's happening a year ago, but also then what's happened 5 years ago. Because we've obviously got some stats on that.
I was going to say, I don't know if I know every single one of those things, but since you have nicely provided it on the computer, I can talk about a little bit. What I know personally is that despite what the media says, despite what people are hearing from friends and you know, the sky is falling and all that kind of stuff. It is consistently continuing to get better at a slower rate. Better, by better I mean the prices are continuing to go up. The inventory is rising, but very slowly. Things are happening and the indicators are very strong that our economy is still very strong here in Denver. The media says differently, but the stats agree with what I feel being out there every day, all day.
So just going on that, so we're talking about average house prices. We're just in Denver at the moment. We're not talking about Colorado in general. We're not talking about Boulder. We're not talking about Greeley or anywhere else. Just talking about Denver. That's where you're primarily based. That's where you do 99% of your business.
Maybe 65, but whatever.
Anyway, so let's just go through. Obviously, I provided some stats for you. You know these stats very well yourself. But just talk about it. Let's just go through the average price for single family attached.
This is something that people are not believing me on, but the data is right here in front of me, so I want people to understand this. June of 2018, the average house price was $555,000, which was up from maybe $530,000 the year before that. It is now $588,000 for June of this year. It was $585,000 in May. So that is a continuous increase, and everybody thinks that the market is halting. It's not. It's going up continuously. So the average, that is the average house price of a single family detached. Even in single family attached, which would be a condo or townhome, the prices have gone up from $422,000 in June to $440,000 in May of this year to $442,000 in June of this year. So again, that's an increase. It's all the indicators are that we are going up. 5 years ago, listen to how different these prices were. 5 years ago, we had detached home prices of $390,000 versus the $588,000 that we have right now. That's a $200,000 increase. And our interest rates are a little bit lower. So it's a pretty strong time to buy right now. And then in June of 2014, attached homes were $293,000 compared to the $442,000 that they are right now. Again, a huge increase, indicating that we are still on the upswing. And what I try to explain to people is that we are a small city going to a big city. So not only do we have a lot of the diversity of economic diversity that we've discussed before, where we used to in the 80s be just gas and oil. Now we're gas and oil, we're technology, we're aerospace. We have all sorts of things going on here that we didn't have before. Our unemployment is the lowest that it is in the country. And so everything's sort of flourishing. And that's why we have why it's such an attractive place to move. That's why we have so many more people moving here than we have homes for them. That's why rental prices are going up. That's why home prices are continuing to go up. So again, I think it's slowed a little bit in the level of growth, where maybe it went from this to this, but it's still heading up, and it's still a really good time to buy. In fact, I think summer is the best time to buy because we're very active people here in Denver. And July and August, you'll see more price drops than you do throughout the year. And that's because everybody's gone. So you've got this inventory of houses, and you've got people like you, not me, but you going camping, for example, this weekend. You've got people traveling around the country, traveling around the world. If I look at any of my social media, 80% of my friends are gone doing something fun right now.
So with that in Denver, there's obviously there's dips in the market, there's highs, there's lows. Why do you think that is? And talk us through the entire year of when people are buying, when people aren't buying, and that may lead into when you should list your house, for example.
Yep. People are not buying in July and August. That changes above $1 million. But for people under $1 million, people aren't really buying in July and August. That's a younger population, and this younger population is out enjoying the reason they live in Colorado. The mountains, the lakes, the travel, they're gone July and August. Families are gone, taking their kids on vacation before school starts again. So July and August are traditionally very slow for buyers under $1 million, under 500. Anything in the $300,000 range is hot all the time because it's just so limited. Anything over $1 million, it's a different type of buyer. So when the house comes up that fits their criteria, they're going to snap it up. But between $350,000, $400,000 and $1 million, it really is going to slow down July and August. And then it's going to pick back up September. Last year it didn't pick up till October, and I'm not sure why that was. I think it's because we had maybe such a nice September as well. Picked back up October, November, and then through the middle of December. It sort of dropped December through around January 15th, and then it picked right back up again, and that's of course because we didn't even make the playoffs. And that, shockingly, the Broncos in the playoffs and in the Super Bowl will be a determinant as to how well the housing market will do. Truly, I promise you that is the case. So last year we didn't make the playoffs. The season started earlier. And the hot season has gone all the way through until right now. I just put a $1.5 million house under contract the weekend before July 4th with 3 competing bids. We ended up going over 1.55. And so that's not something you usually see into July or into June. But I think, again, it's because the weather hasn't been perfect. So the activities people love to get out and enjoy, they haven't been able to do as much as they would like. Now that we've got some sunshine, I think, again, we're going to see our traditional dead July and August with prices dropping. So anyone who wants to buy, let's get out there.
And what about the start of the year as well?
Start of the year, it truly does change based on football and weather. So start of the year starts anywhere from January 15th to around March 1st. If we are in the playoffs, if we make it to the Super Bowl, you won't see people looking at houses until the week or two after the Super Bowl, so March 1st. This year, we saw people looking at houses. It really picked up January 15th. So you have to have a high-level real estate professional who watches every indicator, because I won't let you put your house on January 15th if the Broncos are in a playoff game that weekend. It is a waste of your time. If we've got good weather and the Broncos in a playoff, don't even waste your time. We'll wait until a bye week or whatever else.
I mean, this is heavily Bronco town.
It really is, sports in general.
If you have an open house on a Bronco Sunday, don't bother.
Waste of your time also.
Do it Saturday.
Holidays, big, good weather, really good weather weekends where it hasn't been good weather for a while.
Because everybody leaves.
Everyone goes. It's fun to watch. It's fun to watch, but it is. If you think you're going to get a good weather weekend or a bad weather weekend, and you plan your open house and then the weather changes, your open house changes. We are a happy weather, happy sports town.
So just moving on now to days on market, and I think this is where you once again you set yourself out from other people, is that the days on market is probably a lot related to the price. Mm-hmm. How you price your home, whether it's overpriced, underpriced, the finishes levels, the comps in the area, and that really is the knowledge of that real estate agent of pricing that home appropriately, or even pricing it a little bit lower with the aim of getting it bid up, and you get multiple bid offers, which obviously every seller wants. So talk about the days on market, and then talk about your process of pricing homes and how they should be priced appropriately in this market. If they're not priced appropriately, what happens to them?
So days on market last year, same time, was around 24 compared to 28 right now in June. Last month it was 33, so it was up just a little bit more, but still a balanced market is 6 months, so it's 120 days. So the difference between 24, 28, and 33 is somewhat minimal, but more so than you would think. The shorter days on market, the more important it is to price it perfectly. If you price it perfectly, you are going to get multiple bids, and that frenzy, that competition that people get in will get you more generally than your house is worth. And oftentimes we can even get a little bit of an appraisal gap where people will say, oh, I'll pay any appraisal difference, because they know that they're overbidding and they're willing to pay $10,000 out of pocket to get that home. So days of market are very important. They're very low. They're still traditionally low, even though we are starting to see them go up a little bit.
So what's the general feeling if the house has been on market for 50 days, 60 days? What's the general feeling
from the public?
From the
public, the general feeling, really, if you're in central Denver and the house has been on more than 3 weeks, they think something's wrong with it or it's priced inappropriately. As you get to 50 days, the bids that you're going to get, if you get an offer in your house, is going to be real low. You have to get that excitement the first 2 or 3 weeks. As you go out in the suburbs, the days on market gets a little bit higher, so there's more of an expectation that it may be 3 or 4 or 5 weeks before it sells. But if you're in the city and you don't have an offer in the first 2 weeks, you have priced it wrong, period.
And is there a certain price range for that? Is it?
No, it's everything. It's the one I just told you. We had 2 in a row where we bid at 1.3 to 1.5. We even had a bidding situation of 1.2 2 weeks ago or 3 weeks ago. So if things are priced correctly, does not matter the price point. You have people fighting over them. If you don't have people fighting over it, you've priced it wrong. Period.
Ideal. And then obviously something, you look at above ground price per square feet to That's what the appraisers look at, isn't it? That's what you look at as well when you look at comps. So talk about price per square feet, and then we'll move on from there.
All right, price per square foot has gone up from $279 to $292 right now. It was $291 last month. So $291, $292 is basically the same. But same time last year was $279 per square foot above ground. I'm looking at that one. I'm looking at all. It's still the same. Okay. It's gone up. So it's gone up whether you're looking at detached, attached, or whatever. The average has gone up from $279 to $292. And that is basically the same. May and June didn't really change at all. So, and then the one thing I am seeing a little bit different is the list price to sold price has changed a little bit. So same time last year was 100%. This year, it's a minimal change, but it's a change. It's 99.1 in June and 99.2 in May. So that's the list price to sold price. So you're seeing less than a 1% discount. So last year, if you priced it at 500, it was selling for 500. This year, if you priced it at 500, it's selling for 492, basically.
And why do you think that is?
Well, partially because people are overpricing. People say, "Oh, my next door neighbor got 600,000," and they forget that their basement isn't done. They forget that their kitchen hasn't been updated. So the agent will fight back and forth with them saying, "Well, I'm looking at that one, and that one's this. Well, how about we just try 550, even if it's only worth 525 or 500. So I am seeing a trend of people thinking that they can name their own price despite what the data will show them. So the trend is because it's been so hot for so long, they just want to try and list it a little bit higher, and it's a mistake, but it happens, and because of that, you're seeing a little bit of a decrease in list price to sales price.
And I think that's what comes in when you're going to list a property. You try to advise the client on what they should basically price their house at. And obviously they think their house is worth a lot more. They love their house. This is where they grew up. Their kids grew up and maybe moved on to somewhere else. So they have a certain perception, as you said, like a house down the street could have sold for X dollars, and they want their house to be exactly the same.
Yeah.
How do you get over that with the education of that client when they think, hey, my house is worth $650, and you've looked at all the comps, you've looked at the finish levels, of all the comps in the area, or at least what you think are vitally close to what they have, but you're going, hey, this place is really worth $615. So that's a massively actionable item for agents in this market.
Yep.
Because you don't want to overprice it, because we spoke about that. Then your days on market will increase, and therefore, then it ultimately will
cost you 3 to 8%.
Yeah.
If you overprice to start your first couple weeks.
Yeah. So say I'm the home seller. Hey, Glory, that's great. Thank you very much for your time. I want to list it at $650. You've gone, no, it's worth $615. So we're probably maybe listed at $610 or $609 or $612, or however you want to do it.
$599.
Yeah. So what would you say? And if you think it's worth $615, why are you listed at $599? And what's really the piece of information and advice you can give to other agents of how you can deal with those interesting clients, let's put it like
that? Well, it's many clients. I mean, it's not uncommon to have emotions involved when you've lived and loved in that house. So that's not abnormal. It comes down somewhat to confidence, the confidence that you can impart as the agent about how well you know your product. And for example, one that I just had recently where we took it over, they had started it at $750. I do think the house was worth about $615, and so it's funny that you're having this conversation with me. I think it was worth about $615, but because they had not even looked at comps. They didn't even look at comps. They said, hey, I think this is worth this because it's a really pretty house. All of those things were true, and if we had picked it up and moved it into even 6 blocks from where it was, it would have been worth $750, but it was in an area where the schools weren't as good. It was next to a neighborhood that wasn't as pretty. So they didn't look closely at the comps. Had they looked closely at the comps, it would have been worth about $615. But because they priced it too high, they ended up, we're under contract now at $606. So I came back and said, look, it's worth $615, but it's on the market. It's been on the market 90 days. Here are every single one of your competitor comps. Here is how this one is better, how this one's bigger, how this yard is different than yours, how this garage is different than yours. And we went through item by item by item and said, given all of this data, what do you think the house is worth? And they said $615, which is what it was worth. But because it had been on for so long, we had to go down a little bit to $599 to sort of get some excitement, try to get into a whole new price point to get a whole new batch of buyers that hadn't seen this house that was sitting there for 90 days. So we ended up getting 2 offers because it was priced at $599. We only got it up to $606, which was still pretty good, I think, given that it had been sitting there for 90 days. Had it been priced correctly from the beginning, maybe even at the $615, they may have gotten a couple multiple bids and gotten it up to $625. So that's where I say that pricing it incorrectly will cost you 3 to 8%. And to help get your clients there, you really have to have the confidence. You have to educate them. So once she saw all the comps closely, her emotions went away and she looked at the data and said, yeah, I guess you're right.
So the thing is having that confidence, was also knowing the market, knowing the neighbourhood. If you go 1 block over, it completely changes in some situations.
Oh yeah.
You know, just going over Colfax, for example, like that changes the price of the
Being
house.
close to Colfax, going over from 6th Avenue, from one side of 6th Avenue to the other, one side of 8th Avenue to the other. 2 blocks can make a 3 blocks if you're on 9th versus being on 5th, Hilltop versus Mayfair. That could be a $400,000 difference in some homes. So it's really, really important, not just, it just education for both yourself and then helping your clients.
Well, it's education on yourself, but then you put that
impart
onto your
that
clients.
to the clients.
Exactly. Then they have trust in you, and I think that's that trust point where Laurie comes in, or whoever comes into that listing presentation, or buyers are looking for a house. Like, you've looked at the comps, you've looked at specific comps in that area. You haven't gone, okay, I'm going to look 10 blocks away, you know, just because I can find a house that's the price I want to sell this house for. You know, I think I can sell your house for. Like, no, you've got to be very specific. You'll be very detailed in what you give that information across. And if you don't know that information, then your house is going to sit on the market for a long time. You're not going to sell your place, and then there's frustration, annoyance, and then it just, this whole process is like, oh, it's just another real estate agent not doing a very good job for myself.
Yeah, and sometimes it comes down, a lot of times it comes down to research, where you and I have discussed how important research is, but not everybody is a great researcher. So that's where people have specialty areas. If you're selling an area that's not your specialty area and you're not confident in the research and what streets turn and what schools turn, etc., then you should really refer that to somebody who is an expert in that area, or you're doing your own client a disservice.
One of your friends who works in another agency, you know, they weren't happy with the area and they just gave it over to somebody else who lived in that area.
Yep.
And go, hey, I'll get a referral fee or whatever their arrangement was for that listing. But say, hey, you know this area, I don't know very well.
Yep.
We have to get this place on the market. You know, I think it's like start of June or middle of June, obviously before the July kind of lulls, and they gave it away.
Yep.
I think that shows more confidence in yourself, because you're not going to go after something you don't know about.
Yeah, you know what you're good at and what you're not good at.
Exactly.
Yep.
So just to finish up, Laura, I think it's been great again. So give us top 3 pieces of advice for today's Denver market that you would give to other agents, and what you give to your team members.
For today's market, I think this might have been what I said last week, I can't even remember, but the most important thing is to educate yourself and educate your clients, stay on top of everything that's going on, look at the statistics, just be informed. That's number 1. Number 2 for today's market is move fast, hustle, call other agents, develop relationships, work hard. You've got to work hard for your client, you've got to move fast, you've got to work hard, you've got to stay informed. And what is third? What did I say last week? I'll say this again. This is my favorite line. Don't be an asshole. Be a good person. Be nice to your clients. Be nice to other agents. Be nice to people that you're asking for help with information. If you do, be nice to everybody. If you do all of these things and you're informed and you are kind and you work hard and you hustle, you're going to do well, period. Do those things and you will be successful.
So I think it keeps on going back to consistency, isn't it? Mm-hmm. Like, it keeps on going back.
Isn't that
to the
shocking
same
that
factors.
anything would be consistent with me, but it really is.
Unbelievable, to be fair. But we've now got it on video, so it has to be true. But it keeps on going back to that process of education.
Yeah.
It keeps on going back to that. The more educated you are, you can push that onto yourself, so you have that deep ingrained knowledge.
Yeah.
And then when you put it across to your clients and to other people, it comes across naturally because you know what you're talking about. And once you know what you're talking about, it's so much easier to talk about it.
And it develops a confidence in other people that they feel, I'm out there every day being educated, knowing the market, looking at houses, dealing with other people. So it gives them a confidence.
Well, Laurie, it's been wonderful again. Thanks a lot. Podcast number 2 in the books, and we look forward to number 3, which will come out next week.
Woo! Thank you, and goodbye.